Good morning, everybody. Welcome to the Flow Show. What day? I don't even know what day it is. Wednesday today. Well, hoping it was Friday. Unfortunately not. It's Wednesday, BOC Day, and also Trade Deadline Day, according to Mr. Trump. So should be a fiery US session, whatever happens. Morning, Kay. How's it going, mate?
Morning, Ryan. Morning, everybody. Yeah, it's going fine. Yes, as you say, it's it's a deadline or an undeadline, and then we have a few other things to look out for. So it should be a relatively busy day.
Yep, it is. We're going to take a bit of a diversion today. One of our roomies wants us to talk about stop losses. So we're going to have a look at that. Wants to know, best places to set levels, some general ideas on how you should place stops, manage stops, and identify where you should put your stops. So we're going to have a chat about that. So I'll do a little bit of a rush through the news. I'll do a bit of a rush through the news, and then we'll get into it. Kay's just rushing off to put some stops in. Right, let's start off in China. Let's give it a my ugly mug first. China has responded to the EU yesterday on their ban of procurement of medical equipment, saying obviously they oppose that ban. They are having a few meetings hither and thither. They've had some meetings, respective foreign ministers and whatnot, had some meetings with Australia. And so they want to seek increased coordination on trade with Australia. They've also been meeting with Canada. They've also been responding to Trump and all this stuff about relations and whatever. The foreign minister said equal respect is a prerequisite to China-US relations. Dialogue and cooperation are only the correct choice. Now, and maybe this is a bit of a nod to Trump, or a bit of a blow to Trump, however you want to call it. China is apparently considering ordering around 300 Airbus jets. Now, why is this a bit contentious towards Trump? Well, Airbus is obviously a massive European company, whereas Trump would potentially like Boeing to get that sort of order. So I don't know if this is China playing shenanigans or not, but that's supposedly what they're looking at. So we'll keep an eye on that sort of news. We'll get into a bit of data over in Australia. We had some GDP data out. If I can find it, where we are. We're on Wednesday, aren't we? Yes. There we go. No, still not there. There it is. So this is the Q1 numbers coming in at 1.3, slightly less than the 1.5 expected. Quarter on quarter number also a little bit softer, 0.2%. SMB's, I don't even know how to say his name, Shudin, so call it that, Shudin, says we look at price stability in the midterm, not next month. He was also saying that they don't react to 1 month CPI data. As we saw yesterday, it dropped into the negative. While I've got the calendar there, I might as well rock through all the rest of the data we've had this morning. We've had some PMIs, as you can see, services day, Aussie there doing a little bit better, 50.6, better than expected there. Into Europe, Spain went backwards a bit, 51.3. These are the first numbers, not the final numbers. So was expected to pull back to 50.8, but it came in much worse. Italy, that improved to 53.2. It was expected to go down a bit. And then these are final numbers from France. A decent improvement over the flash number and well up over last month as well. Although Germany's final number went the other way, coming in a bit worse than the flash number, 47.2, confirming that negative drop from last month. The pan-Eurozone number, a little bit of improvement, but still stays below that expansion level. UK as well, an improvement of 7 pips over the flash number and confirming the shift into expansion as well. This is all yesterday's stuff, but BOE's Bailey and all the rest of the clown show was waffling on. He said he was undecided ahead of the May policy decision. Says he will not make any predictions about the June rate decision. says the path for rates remains downwards. How far and how quickly rates will fall is shrouded in a lot more uncertainty. Says there's been developments both ways since the May meeting. Says basically what we've been saying for the last few weeks. Non-US investors are reassessing their view of the amount of US risk they want to take. Then talking about data, says business surveys are probably a better guide to the UK outlook than the recent GDP data. BOE's Man says my switching vote from a 50 pip cut to a hold reflected the spillover from financial market volatility. It's better to make bolder moves on rates than hold for longer. Germany's auto industry, whatever it is, lobby, the VDA, says our industry is highly affected by export restrictions on rare earth materials. Says though some licenses have now been granted, this is not enough to ensure smooth production. Says production delays and outages can no longer be ruled out. So that's not good news for Germany and their auto industry. Whether this will help them or not, but the German government has approved a 46 billion tax package that's apparently designed to spur growth. It won't spur anything if firms or auto firms can't get access to rare earths. But anyway, they're still going ahead with their growth boosting measures. We'll see if they work or not. Back to some of the data from yesterday in the US. We had JOLTS numbers, which again, just when you think it might be wobbling, we get a positive number. JOLTS came in up higher than expected, higher than last month as well, 7.391 million. Amongst that, the breakdown in there was a bit of a move in layoffs that jumped to 1.786 million, which I thought looked a bit of a wobble when I looked at it, but I checked the chart and actually March's was a low one, so we're back in the same range that we've seen before. Quits was also a bit lower, 3.194 million. That has been trending slightly softer of late. Quits is where people can look to change up jobs. It's an indication of whether there's confidence in the jobs market to go looking for a better job, move up the ladder. But that's been coming down of late. So everything tickety-boo as far as JOLTS go. We're not running in the 8 millions, 9 millions that we've seen previously. But for this month or for April, we're not going down either, when even I was expecting that might happen. Factory orders came in a bit wobbly as well, down 3.7%. A lot of that is obviously trade related, all this front running and toing and throwing and whatever. It was a positive 3.4 the month before, now a negative 1 as we cross over into April. Fed's Bostic still sees a possible path to one rate cut this year, obviously depending on the economy. He's in no hurry to adjust rates. Says it's a tough call to say if the Fed would be cutting rates if absent of the trade uncertainty. We've got all this China stuff going on still, as mentioned. Treasury Secretary Bessent says China has a choice on being a reliable partner. Trump, according to the White House, is going to be speaking to Xi on Friday, this much weighted call. He says on Truth Bomb, I like President Xi of China, but he's very tough and extremely hard to make a deal with. It really has been a roller coaster of Trump emotions over China. One minute he's angry, next minute he's pally, and meanwhile China just remains silent on it all. But we shall see if we get a call or not. Kay, just on that thing,
Yep.
All doesn't happen Friday. What's the market going to think of that?
I would say not a lot of good, especially if she did not have the get the message to pick up the phone. We're still in for as long as he does not pick really that phone up, and has what could be understood as a constructive tone, because for the time being they are just, especially from China's side, throwing the pots with the flowers to the US. that's not going to be taken as very positive, right? And as we are Wednesday, and G has still not confirmed that he would pick up the phone to Trump. We know the US is dying to talk to him, but for the time being, he remains shut door. Yeah, I mean, picking up the phone will be initially taken as positive, but then what is he going to tell Trump, right?
Yeah, absolutely. So yeah, if we get a phone call, that may be positive.
Yeah,
It depends on the outcome of the phone call. I
exactly.
don't expect anything more than a we will talk again in future, or the teams will talk. And I had a good
Yeah,
call, and we agreed to talk again. Sort of crap.
yeah. Let's not forget that in the meantime there are work groups that regularly meet, whether it is in person or virtual, between the US and China. So um, don't get fooled if G says, yeah, we have work groups in place and stops it there. They are already in place, okay?
Yeah,
So I mean, there to be positive, there has to be a little bit more coming out of that call.
yeah, exactly. Right, Trump's tax bill apparently passed one of the hurdles by one vote yesterday. Mr. Elon isn't happy. He called it outrageous, moaning about how much it's going to cost. According to congressional reporting, finance reporting, whatever the department that is, it's going to add 3.8 trillion to the government debt, which stands at 36.2 trillion currently. So that's an over 10% hike to the government debt. That's what a lot of people are getting worried about, this tax bill thing. It's something that if it does go all the way through and there's meetings happening to jiggle it around and whatever, from this point forward. But if it does go through, and that sort of number, 3.8 trillion added onto the government debt, is a realistic number, we should watch ratings agencies again, because that's one of their big items on how fiscally sound any country is. So that might get those rating agencies thinking about changing their calls once again. And we know what happened the last time that happened, but this would be, rather than one outlier ratings agency bringing their rates down in level with everyone else, this could be all the rating agencies taking the US down a notch. So it's a potential risk we have to look out for if that happens. Meanwhile, the BLS says that some of the April jobs data will be corrected at the NFP launch this Friday. They say the corrections are related to weights in the household survey sample. It says major measures such as unemployment rate will be affected. Just to give you a heads up that there will be some tinkering going on with April's numbers on Friday. And Bloomberg have highlighted that apparently some traders have loaded up on hedges against dramatic Fed rate cuts. This is if the market getting a little complacent that the Fed aren't going to be cutting much, but some traders are thinking, well, what if they do end up cutting much? What if things do turn sour? So they've started getting hedges in play for that. Doesn't mean they're going to make money out of it, but it's just a bit of coverage if something were to happen. So just to bring you up to speed on that. That's it on the headlines. Nice and quick, nice and easy. NSK's got anything else?
No, that's it, mate. No, we've I think we've covered everything.
Cool. Right. Well, I hope our mate Mark, very nutty, is on today, because this is his request about talking about stops. And if you have any questions about such things as we go over that, just put them in the Zoom chat here, and we'll go over it. So we'll kick off. Well, just trying to work out what is the best way to kick off. There's the problem with a lot of trading is that there's obviously big contradictions. Okay, you can have rules based, or your own rules, and rules based outcomes, if you like, with regarding anything, entry levels, stop levels, whatever you want to do. Okay, but there's always going to be a contradiction. for example, and this is probably a good example I can use today, euro sterling. Okay, the first thing you want to know is if you're picking levels to enter in and you're going to respect those levels to enter a trade in, then you can't ignore those levels when you're in a trade and when you're looking to place stops. So it's no good saying, I want to buy the euro here, 84, and I'm going to wait for it to trade up to 87. And you're going to ignore everything in the way. And the same way on the other side, okay? You've got to respect the level. So the same thing with stops. Now, the thing with stops is where do you place it? You know, let's say I'm buying at 84. I've got levels here, 83, 80s, 70s, 60s, 40s, all the way. So where should I put my stop on such a trade? There's two ways to look at it. Firstly, you want to assign your risk. So be that 0.5%, 0.25%, whatever. Put it into pip terms. So if you want to risk 1% on your position size and that equates to 50 pips, okay, then you look at your levels around that 50 pip mark. Okay, so 84, I want to buy there. I've got 50 pips stop. That's 83.50. Now, have I got any levels around 83.50? Well, I've got that little low there, but I've got more traffic down here at 40s. Or I might want to be a bit tighter and go around this area of traffic here, 83, 60s, 70s. Okay, so you can, it's no good saying I want a 50 pip stop and just slapping it in. Okay, because what if your stop is above a big level or, you know, miles away from a level in the middle of nowhere? You want to give yourself a chance to not get stopped first and foremost. Okay, so the first thing you don't do is put it ahead of a level. So if my level down here, 83.40, call it, I'm not going to put a stop at 83.43. Okay, I'm more likely to go under, because that way, if the market comes down, if the level's going to hold, it's probably going to hold, maybe start holding a few pips in front of it. So you don't want to have a stop 5 pips ahead of that level. Your stop gets pinged, we never hit the level, and then it goes your way. Okay, so you don't put your stops on levels. You've got to build in a bit of room. But you've also got to take volatility. So here's the contradiction. On a pair like euro sterling, you know, a 5-10 pip stop below level might suffice. Okay, do it on something like dollar yen, and it's not going to suffice because this thing is pinging around all over the place. So you've probably got to go wider on your stops, give it a bit more room above and below your levels, because you get these extensions. You have a big level and you get these big extensions. Could be 100 pips, 130 pips. Okay, so you need to adjust for the pair, need to adjust for the volatility of the pair. Doesn't mean you're going to be right. Okay, you could still get stopped out, even if you have what you think is the best stop placement. But that's just trading. You have to suck it up and get on with it, as far as that's concerned. The other thing is tinkering with stops. Okay, people who say, we say, don't change your plan. If you've got a plan, stick to it. Yes, you can. With experience, the likes when me and Kay have been in this long enough, and Blake and everyone else, you've got experience. If you have a stop level, but it's getting tested a little bit, it's coming close to your stop level, it's not really getting through, and you think, right, we're holding this level, but there's a few little bumps through it, I'm going to move my stop just 5 or 10 more pips out the way, just to see if I can stay out, you know, any noise. That's fine, but you can do that when you have enough experience to be able to understand price action and make those little adjustments. I would never move a stop 50 pips. That's just complete bonkers, okay? Because then you're changing your whole trade plan. All right, so you can make minute adjustments, but don't be getting in a trade, it's going offside and think, right, my stop might get hit, so I'm going to move my stop another 30 pips because the market's going to come back. And I'm just going to keep moving it, because then you're changing your trade, you're changing your plan, and you're increasing your risk more than what you were. So you have to be sometimes a bit rigid, even if that means getting stopped out. And even if you get stopped out and the price goes the other way, tough luck. That was your plan. You stuck to your plan, you move on. It's better to do that than say, oh, I'm going to move it another 20 pips to try and stay in the trade. And then you move it another 20 pips. And then all of a sudden, completely different trade, and now you're potentially losing even more money. So you have to be rigid to a point until experience can let you make those little adjustments. Oof, a lot of waffle there, Kay. What do you have to say about stocks?
Yeah.
And
Well, then first of all, in general, and that's a bit what Gav was just saying. It first of all depends whether you're long-term or short-term in positions. Now we are going to assume, and Mark told us in the room as well, that he's more like a not intraday but day-to-day trader. That's still a difference. So you can keep your positions overnight, and I'm not going to start talking about intraday trading because that's a different ball game. There's this jobbing, or people in the retail market call it scalping. I call it jobbing. Your stop should be closer. You should be trading closer as well to levels, and then be tighter. But if you look like the day-to-day trading or over a number of days, yes, the first thing is what you need to do is like identify fundamentals, changes in fundamentals. Um, and if you go, well, the yen is something so volatile right now. It's a bit tough, but even so, there are decent trades to be done there. But in general, you should identify the level, let the market come to you, and then identify where you're wrong. And it is different, and we are just going to talk about a simple trade, right? Because sometimes we are building up trades and then it goes like a longer term, and it's a completely different ball game. But if you look like one simple trade and one simple stop loss order, because that's the question about stop losses, not really take profits or so. But you should first of all either let the market come to you or trade a kind of a confirmed break, or returning to a resistance or returning to a support, but still keep the fundamentals in the back of your mind. What have we done before? Why am I going to go long or short? Okay, because um, and I respect that people make money out of it, but I can't just trade on a picture saying like, oh, that's a line, that's a fib. I'm going to take a position just out of the blue, you know. I can't do that. So it should be supported by at least some fundamental thought behind the trade. That's one. And then, as Ryan says, if you look at where the next what do you want to risk on a position? Okay, if let's say, assuming that you on a position, on a given position, you want to risk 1%, and you know how much 1% is worth, then you take a position size according to where you want to put your stop loss. Okay. um, and again, just to keep it simple on that dollar yen, for instance, there's this trend line support coming in just below 143. You could buy the 142.80, 142.70 or so. Then you look at the level just prior to that, where the low was, just a little bit left, go left, go left. The other low, go left, yeah, over there, and yeah, no, the low, just a little further to the right. Yeah, that one. That should really be where your maximum risk is on that position, because if it goes through the trend line and you confirm through that prior low, it's probably going to be a wrong position, right? So, and then you adapt the size of your position to that. If you think the dollar um, should be doing a bit better, or the yen has strengthened enough, and you want to be to the other side, I think that's a reasonable thing, where a reasonable level where to put your stop loss. And then of course Ryan has this bit of a blue purple zone right around there, right around below. So um, there's coming, that's usually makes things a little bit more complicated, but you can go into the zone and then bounce. Now, um, the thing, and the yen is perhaps not the easiest one to put a stop, but I would in any way not allow to go it through that prior low. So there's your stop relatively well defined, and then the market will do will do what it does. You know, is that not enough? Do we need to go to an April level or so? But that is the simplest way of putting a stop loss. I usually don't change my stop loss, but what I could do is get stopped, get into that blue zone, and then start to go higher again. And then I'm entering into a new trade, and I am going to put my stop this time under the blue zone. You know, the thing is, I regularly re-enter stuff if it goes a bit further than I thought, and then it comes back through my level, providing that the fundamentals haven't changed. Okay, so I'm okay to take stops because my risk is always defined. And what I always say is that whatever you do on a single position, you cannot lose that much that you cannot take the next opportunity. The first rule of managing a portfolio is have your account to a level where you always are ready or have the possibility to take the next opportunity. Never blow up your account on a single trade. Okay, there's too many people, just too many people doing that. Too many people coming to us and say like, "What have I done wrong? I've blown up my account. I had these positions and those positions and those positions." And a bit in line with what Ali you are saying today on your gold, that those things are tiring. I call it tiring your account. Okay, so you can't ever be in that in ever become in that situation. So always manage the account to be able to take the next opportunity. And as small as sometimes your account may be, because we know a lot of retail traders work on relatively small accounts, you still have to respect your own risk management and your own risk on any given trade. Okay, so I know you're not going to get rich on a trade, but there are many opportunities in the market. So I mean, if you have with a bit of experience, 4, 5, 6 positions, sometimes it is possible that 2 of them blow up, but the other 4 are going to make you money, and your account is still going to be okay. But the thing as well on stop losses is you have to do the preparation work before. And as Ryan already said, don't take a position and then start to wonder what's going to happen, okay? Do your preparatory work before, and you will end up like us after 30, 40 years in the market, missing opportunities, but with the preparation that you have done, the opportunities that you are going to take are going to be much better, okay? This is something that I can't stress enough, to do the preparatory work. We talk so often in our room that we miss opportunities. I mean, no later than this morning, one of our roomies says, "Oh, I had $1 billion came to within 1 pip of my level, but I didn't get it." Okay, you moan, but um, that same person has been taking like multiple positions which have worked really well. So you're going to moan over one, but what's next should always be the thing. And as the people in our room do more and more, yes, they hit one wrong, but then we are studying to see where the next thing where the next opportunity is. And that is paramount when you are in a trading book, when you want to do this on a regular basis. You need to do the preparatory work before, because otherwise you are going to end up just buying lottery tickets. And it's just sufficient to see where the price plotted for Euro Millions. There's a lot of lottery tickets that have been bought who didn't win. Okay, so if you and in the market, if you buy lottery tickets, it's the same thing is going to happen to you. So don't buy lottery tickets. That is the first rule of trading. And then once you have done the preparatory work, your stop loss is going to be a case of the risk management of your portfolio, whether it be 20 pips if you really trade off a very, very sharp level. We've had a few, and there are always a few. Like for instance, if you look at what Ryan says, 112, 115. The last time 112, what did we do? 3, 4, 6 pips below, and then it bounced 250 pips. Well, you know, I mean, that is if you do your preparatory work, and Ryan did it. He says that 112 is the level. We've just traded like a smidger perhaps below, and then the thing flew. Or yeah, we actually not even traded it, did we? But we came very close. So I mean, for a trader like for instance, us, I mean, I'm okay to go into a position when it's a big level, you know. I'm okay to enter a position starting like 25, then 10 pips above, and then see what the level does, and then put my stop. And then there's a level below that line, 111 and a half, and which was a peak low just a little below there. Well, for me, that's a valid stop level, just under there. But that was a pretty decent level. So look at the levels what I've done. You have done a few lows before, then that peak low, but it's around 111 and a half. And from that level prior there, we also bounced. So that's somewhere where my stop is going to be, for instance. But there are levels which are really nicely identified. And if you do your homework, and we've been saying that over the shows as well. Okay, euro dollar starts to move higher. Yeah, we are not going to go in a straight line. Then this is your level, and the level stays valid. This is now a proven level. You can bank on that level, and those are levels that if the market trades in line with the fundamentals are always very good to me as well. Okay, so that is the thing where you need to identify your levels, and everybody will have his or her own levels, right? Because it's not a real science. It's not mathematics. One plus one is not two in markets, right? So everybody will have different things they look at, but you always have to apply the same kind of discipline to what you do, putting your let the market come to you, prepare for entering a trade, and then have your valid stop loss in place. And then you can indeed you can sometimes tinker around with it, but the most important thing is to identify the levels where you think you're wrong, and then trade accordingly. But the levels where you're wrong, and now, if you want, I can look at gold, Ryan, but you can put gold on there because I have the levels pretty much defined there. Yeah, on your thing. Even though you know the if you look at the high just on the 30th or the 29th of May, the high was what, around 33.30 or so. That little right, that one around 33.30. Ali, you're asking whether you were right or wrong to put your stop at 33.33. Well, I think that picture tells you tells you the answer to your question, right? Why put it above there? Even on Ryan's picture, it's quite clear. And if you look at trend lines and stuff like that, the level was around 33.30. So if you put it at 33.33, 34, you run the risk of getting stopped. And that's something that I hate to do is if I have to put my stop loss in between different levels or before a level that should be important, I'd rather not take the trade. I really rather not take the trade, even if I miss an opportunity, and we are going to miss opportunities. Okay, it is just the rule of trading. We are going to miss opportunities. But if I have to put my stop before a reasonable level because of my position, then either I size down and I put it below, or I don't take the position. Okay.
Yeah, great stuff, mate. Great stuff. And just looking at Ellie's comment, you know, you're trading a market at the moment that's very volatile, and you're looking for an $8 profit and an $11 risk. You know, so your risk reward, and we've spoken about this before. You know, stop at 33 for $11. You know, that's not good risk reward when you're only trying to get $8 on the other side. Plus, you're also trading a very volatile market at the moment. We know gold is volatile. Look at this, just over the past few days, we got moves of hundreds of bucks. So you can't trade tight in a market like that. Or if you want to trade tight in a market like that, you've got to reduce your size. or you've got to account for that volatility with your stop levels. You can't have your stops too close. And like Kay says, you know, even if you had a stop there at 30, you're risking a poke under because there's a lot of noise here. There's nothing in here. And again, as Kay says, your charts are your own, other people's charts are their own. So you have your levels, but you're messing around in heavy seas, okay, in a little dinghy. And so you need to adjust to those levels. And one thing that, like Kay's mentioned as well, you can get into a situation where you don't know what level to put your stop on. Let's go back to Euro Sterling again. You know, let's come in a bit. You know, where do you put a stop if you've got several levels? Okay, which one do you pick? And that's why you've got to assign your risk in pip or monetary terms at the start. So if you want to lose $500 trading a level, okay, you don't just go, I want to lose $500 and that's where your stop's going to be. You have to adjust it. So if your stop needs to be 60 pips, okay, and that puts you over your 1% or $500, then you reduce your trade size. And you keep your risk the same. You don't increase your risk just because you want to put a stop somewhere. You keep your risk the same and you adjust your trade size. And Mike says a thing as well. You know, a lot of traders want to trade too big a size, and that is a big factor for a lot of people who don't have big trading accounts. You know, I'm sorry if I, you know, bust your dreams or whatever. You're not going to make a fortune if you've got a 10k account, okay? Because if you're risking 1%, at max you're risking 1%, okay? Then you're talking quite small numbers. You're talking a couple $100 here and there, okay? Now, if you think you're going to make $1 million in a year on a 10k account, trading responsibly, it ain't going to happen unless you're either the best trader in the world or you get very, very lucky, okay? So if you don't have enough money to make decent income from it, okay, then you have to build that income up. You have to build your account up. You have to learn to make those 0.5%, 1% gains, okay, and do that consistently. And if you do that, then over time you compound your account and you build it up and you build it up. But if you go risking 10, 20, 30% because you think, well, my 1% is only $50 and what does $50 get me? Then you start over trading, you trade too big and you blow your account up, going for those jackpot numbers. You've got to trade within your account means, okay? So don't think you're going to make 10 grand a day, 10 grand a week on a 10 grand account. It ain't going to happen unless you're gambling 100% every time. And that's what it is. It's a gamble. It's not, you're not trading. So you have to learn the processes about that. Well, that was a little bit informative, and keep the questions going. If you have anything coming up, put them in. I'm going to, Michael, can you suggest a maximum % risk on any trade? You should really not be risking more than 1%, okay, at a max. I mean, I don't do that on most trades. I'm probably round about the 0.5% mark. The only time I will go higher than 1% is if I'm long-term trading. Okay, so if I'm trading over big, huge range, and it's a trade I'm going to be sitting in for 6 months, a year, whatever, then I might increase my trade size. And the reason for that is because I'm trading over such a big range, I have plenty of time to assess the trade. So I can put a little bit more in, but also I might not even get as much risk on if I'm branching out over, you know, hundreds of pips at different levels, because I might not get all my trade on. So I may think, oh, I'm going to risk 2-3% on this trade, but I may only get 0.5%, 1% on because my levels over that 3% don't all get hit. So I end up with a smaller trade, which doesn't matter because anything less than the risk you wanted to do at the start is better. Okay, so you just, if you're intraday trading or short-term trading, jobbing it around in euro dollar, you should be risking no more than 0.25%, 0.5% at the most. If you're doing 50 trades a day, then they should be small risk. And, you know, if you're scalping, small risk, and you're looking for those quick hits, and your account will build up, build up, build up. Okay. So that's trade size. No one should be going over 1%, particularly inexperienced traders, because exactly as Kay says, your goal is to stay in the game, not to get wiped out by doing 5 trades and your account's gone. Okay, so stay in the game, so you've got another trade you can take, and every loss you have doesn't hit you. Now, just quickly back to Ali, and this is for others as well. If you find, and DK is our man who we were talking about with missing his entry by a couple of pips, if you find you're missing a lot of trades by a few pips, whether that's entries, whether that's stops, you keep getting pinged on your stops by a pip or so, then you need to take a little bit of pause and assess where your entries are and where your stops are. Because if you keep getting hit and it keeps being the lows and highs of the day, then maybe you're not reading your charts properly, you're not picking your levels properly, and that's happening. So if you find that's happening too regularly, you need to adjust things. Maybe, again, take your trade size down. If you were going to put your stop, at a certain point, take your trade size down and make your stop a little bit bigger. It's those sort of adjustments you can make, okay? Because markets can move differently. You can have different volatility. So if something keeps happening, you need to change it, and you need to try and work out what you need to change. So pause your trading, have a look, and see what adjustments you can make to counter what keeps happening to you. Otherwise, as we say, some stuff, it's just tough shit. You don't get your levels or whatever, you miss out. That's it. That's the way it works. You can't chase, you can't fight against it, you can't get FOMO. You call it shit happens and you move on to the next trade and put it out your mind.
David, are you in our room? David Fox? Are you Fox in our community? Yeah, ask the question in our room, mate. Because there's no right or wrong answer to it, because we don't know whether you're a jobber, a day over day, or a medium or long-term trader. This is a discussion which we may actually have another day. But I think for the sake of the time, because we could talk about orders and stops for hours on here, but we may talk about it in our room, or take that question for another day, perhaps. Ryan, what would be your max trading side on a certain account? I mean, okay, we can talk about it on one of the shows when we have the time. But perhaps now we need to take a quick look, because we have the Bank of Canada and we have the PMIs this afternoon. Perhaps we should have a quick run over what's to happen there, because I think, for instance, on the dollar CAD, we are on an important level, and we could be on the move this afternoon.
Yeah, I'm going to ping it over to you, mate, now. But there we go. Just while you're setting up, just quickly to David, it shouldn't matter. It doesn't matter what your account is. Doesn't matter what your account size is. Your rules should be the same. No more than 1%. But as Kay says, depending on how you're trading. But anyway, come and speak to us again, mate.
Or we can really talk about it, because there's a lot about those rules about 1 or 2% or 0.5% or something, and it really depends as well on people's experience as well. Now, I just wanted to, because we have the Bank of Canada today, and you have the combination of the Bank of Canada and the especially the ISM services PMIs in the US, and as you can see here, we are on important levels. Been talking about it on prior flow shows. We talked about it as well on Face. We are on an important level here. Okay, so we have, like, today the Bank of Canada and the ISMs, and then I'm going to jump over to Friday. We will have both job reports as well. Okay, so this, in my opinion, is really an important week for the dollar CAD. Okay, I'm not saying that too often, but I think for the dollar CAD here and now, this is an important week, and we are on the level, and it could be that we have a decisive break coming here. So this a couple of potential outcomes here for the Bank of Canada. We could have so now the majority is not expecting a cut anymore, but a dovish hold. We could have a dovish hold. We could have which is now again the surprise would be that they cut off the wall because it's still a limit border one, but then announce a pause, or we could have a pause and still a pause, which would be quite bullish for the cat perhaps. So depending on one of those three, I would say, outcomes, we could have a break here. So if it doesn't, okay, then we need to look back at what's happening around, I'd say 137.80 up to 138.15 over the course of the next couple of sessions. But if we get a break, be careful, okay? If we confirm here under that prior low 136.70, I think we could be on our way to 134s, all right? Providing we get a break and we hold below, all right? So this is why I wanted to show the dollar cat. I've been showing it before. I've been saying that we were that this was a pretty big support zone as well. If you look back left, we have been trading this zone quite often, this 137, 138. Well, we are here now, all right? And we are just resting on it. So this is going to be, in my opinion, an important one, okay? So I just wanted to say where we are and to caution you, because if you have a position ahead of it, just know your risk, because if the Bank of Canada surprises for these ones, they usually, we have to also say, McClem has been erring on the relatively dovish side of things. So that would be an additional surprise if they are a bit less dovish and they say like, okay, we have done what we had to do now. Now we are going to just wait and see what happens with the tariffs, etc., because we had, if I'm not mistaken, a pretty high CPI print last time as well. So okay, so I just wanted to show this very important level on the dollar cat. Ryan, that's really all I want to show. No, look, this is what we had here on gold. So you have this 33.30, the 23.6 was 33.28, and we had the broken trend line here, Ali. So just wanted to show in support with what Ryan showed before as well, that level on gold. So try to identify those levels. It's going to make your life a bit easier, I think, as well. If it goes, of course, you're going to get stopped. Maybe you lose an extra $4 or $5 on the pair, but then you adapt your amounts, as we've been saying. Ryan, back over to you, mate, if you want to talk about anything else.
No, I think we'll call that a show, mate. Good stuff as always. I hope we've given you a little bit of insight, and we're always happy to talk about these things, especially in our chat room. Okay, so if you're in there, you want to ask us something. Okay, you'll be doing yourself and the community a favor, because there might be other people in our room who have the same questions but too scared to ask. Never be scared to ask a question, particularly in our room or here on the chat while you've got our attention. So yeah, good show today. Thank you very much. Thanks, Mark, for giving us that to talk about. I hope it's helped you out, and have a great rest of your day. Take care of the BOC, and we will see you tomorrow morning ahead of Queen Suntan and a clown show. Have a good one, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.